Okay, let's unpack this. Welcome to the deep dive. Today, we're embarking on, well, a really fascinating journey for any company thinking globally. The path to listing on NASDAQ. When you think NASDAQ, you probably picture innovation, right? Cutting-edge tech, maybe?
Yeah.
A truly global stage where rising stars from, well, everywhere converge. It's definitely more than just a stock exchange. It's sort of a beacon for businesses looking to make a serious mark internationally.
And that's exactly what we're going to explore today. This deep dive, it isn't just about, ticking off listing requirements. It's about understanding the strategic blueprint, the secret sauce, if you like, that lets a company truly step onto that global stage and hopefully thrive. We'll break down the specific criteria, the best practices for a NASDAQ listing, everything from the market tiers, financial prerequisites,
Right.
to those absolutely critical bits on corporate governance, and what it genuinely means to sort of level up a business for that broad international appeal. It's understanding not just what NASDAQ looks for, but maybe more importantly, why these things matter so much to global investors.
So let's start with the basics, the structure. NASDAQ isn't like a one-size-fits-all kind of market. It's actually segmented pretty cleverly into 3 distinct tiers. They're deliberately designed for companies at different growth stages. It feels less like one massive hurdle and more like a strategic ladder, maybe, offering a clear progression.
Exactly. A ladder is a great way to put it. This tiered system, it allows for a logical, sustainable progression for companies. At the very top, you've got the global select market. Now, this is the premier tier. And naturally, it comes with the toughest requirements. It's typically for the big players, large established corporations that have already proved themselves on a grand scale.
Okay, the top row.
Then right there in the middle is the global market. This tier, it's meticulously designed for mid-sized to larger companies. It strikes a nice balance, really, between prestige and broader accessibility. It's often where many ambitious, fast-growing companies find their feet.
Excellent.
And finally, there's the capital market. This is the most inclusive tier. It's specifically tailored for smaller to mid-sized companies, often the ones growing quickly, the ones with, substantial potential. It gives them a structured, accessible entry point onto a global platform, kind of grooming future market leaders.
So the real genius here isn't just about letting more companies in. It's about validating different growth paths. This tiered structure, it has a brilliant strategic implication for you, whether you're running a company or maybe you're an investor looking for what's next. It means that even companies that aren't, huge giants yet, but have that potential, that solid vision, they have a clear step-by-step way into a major global stock market. It's not just an exclusive club for the titans. It really is a ladder of opportunity for the next wave of global players. It lets a company sort of mature into the tougher requirements rather than being forced to meet the highest bar right from the start.
And that incremental path, well, it just seems far more sustainable, doesn't it, than demanding a sudden massive leap from a company perhaps still deep in its growth phase.
Absolutely. Now let's shift gears a bit to the financial requirements. This is where it gets surprisingly flexible. NASDAQ doesn't just demand one single type of financial strength. They actually offer multiple pathways. It seems pretty clear they're looking for fundamental soundness, not just one narrow metric. Is that right?
Absolutely. That flexibility is a key strategic point. For each tier, a company only needs to meet one of the specified financial standards, which, allows them to highlight their particular strength. Let's take the global market, for instance. Companies there can actually choose from 4 different standards to qualify. Lets them put their best financial foot forward, so to speak. First, there's the income standard. Now, this isn't just about current profit. It needs strong aggregated pre-tax income over the last 3 years, plus positive income in the last 2, and a pretty decent chunk in the most recent year. It shows sustained financial health.
Okay, so if a company is maybe reinvesting heavily, pouring money into R&D or expansion, they aren't necessarily out if they're strong elsewhere. What are those other pathways then?
Precisely. That's exactly the point. Another really vital option is the equity standard. This one focuses on having a substantial amount of shareholder equity, plus an operating history of at least 2 years. It speaks more to a robust balance sheet, a solid capital base, indicates financial resilience, you could say.
Right, the underlying strength.
Then you have the market value standard. This looks at the company's total market cap. This is more about reflecting broader investor confidence, the perceived value, even if current profits aren't maybe at their peak. It's about what the market thinks the company is worth.
Market sentiment.
Exactly. And finally, there's the total asset total revenue standard. This looks at the overall scale, assets and revenue. So this really allows a company to showcase its fundamental soundness through different lenses, multiple ways to prove stability and potential.
That feels like a huge strategic advantage. It means NASDAQ isn't just fixated on the highest profit earners in every case. They're looking for fundamentally sound companies, even if those companies might still be investing heavily, like we said. As long as they show stability and strength in other key ways. It's about recognizing true potential, that solid foundation, not just the current bottom line.
And this strategic flexibility, it extends further down the ladder too. For the capital market, remember, that's designed for the smaller to mid-sized growers. Well, the criteria there are a bit more approachable. They offer three main choices. They can qualify under an equity standard showing a solid equity base and that operating track record. Or if the market perception is strong, they can meet a minimum market value requirement showing investor enthusiasm. And for companies already showing profit, they can use the net income standard, requires a certain pre-tax income level recently. This broad set of options really ensures a diverse range of solid companies can get access. It truly supports growth companies at different points in their journey.
Okay, moving beyond the raw financials now. Let's shift focus to something critical for market health. Liquidity. Beyond balance sheets and income statements, the ability for shares to actually be traded actively. That's paramount for any healthy public market, isn't it? For you as an investor, it's about how easily and fairly you can buy or sell without, drastically moving the price yourself.
That's a crucial strategic point. Absolutely. NASDAQ has very specific requirements designed to ensure just that. Robust trading and a broad active investor base. First off, there's the public float. This means a significant chunk of shares, usually over 1 million, depends on the tier, must be genuinely out there with public investors. These are shares not held by founders, insiders, or big institutions, but truly available for open trading. It ensures widespread participation and stops a few players from having too much control.
Got it. So it's making sure the stock isn't all locked up, but actually available for transparent trading by the public.
Precisely. And building on that, companies also need enough lot holders. That means individual small shareholders, typically several hundred of them. This ensures wide ownership distribution, broad interest in the stock. It signifies a healthy, diverse investor community. Furthermore, having at least 3 or 4 active market makers is absolutely crucial. These are firms ready to buy and sell shares constantly. They facilitate smooth trading, narrow the bid-ask spread.
Making it more efficient.
Exactly. Ensuring fair and efficient pricing for investors. Easy entry, easy exit. And finally, there's a general guideline that the initial public offering, IPO price, the opening price, should generally be above a certain level, typically around $4. All these things work together to create a dynamic, fair, trustworthy trading environment, something that appeals globally.
And when you lay it out like that, it's clear these rules are fundamentally about building trust, ensuring a dynamic, fair market for you as an investor. You want to know that when you trade, it's in a liquid, transparent place, not some thin market where one trade rocks the boat.
Couldn't have said it better myself.
Okay, beyond the numbers, beyond market mechanics, here's where it gets really interesting, and arguably where the real integrity and maybe the long-term viability of a company truly shines through. Corporate governance. This isn't just like a compliance item you check off. It feels like the bedrock of a company's international credibility. Investor confidence relies on it.
Indeed. And NASDAQ places immense emphasis on robust governance structures. Why? Because it signals integrity, accountability, and ultimately investor protection. A core requirement is that the board of directors must have a majority of independent directors. This creates crucial checks and balances. It ensures major decisions aren't just driven by management, but are subject to impartial review for the benefit of all shareholders, not just, a select few insiders.
That sounds like NASDAQ is really pushing for a genuine balance of power inside companies. Right. But what's the biggest challenge you see companies face with that? Implementing this independent majority, especially if they've always had a very, say, founder-led or insular culture.
That's a very perceptive question. Often the challenge is cultural. It's about shifting deeply ingrained power dynamics norms. It needs a real willingness to embrace external, unbiased oversight, which isn't always easy.
Yeah.
And a cornerstone of this financial oversight piece is the audit committee. This is absolutely critical. It has to have at least 3 independent directors, and they all need strong financial literacy, their job. Rigorously oversee financial statements, internal controls. This effectively forces companies to elevate their governance games to global standards, ensures transparency, accountability, and financial reporting.
So it really professionalizes things.
Definitely. And beyond those big ones, the source material mentions other key governance bits. There's a strategic focus now on disclosing board diversity, gender, race reflecting a more modern, inclusive approach. Companies also need robust internal controls, clear channels for investor or employee complaints, and, of course, strict adherence to the U.S. Securities and Exchange Commission, the SEC disclosure rules. These are just non-negotiable for a global listing. They're the gold standard.
It's clear, then, adhering to these tough governance standards isn't just about meeting rules. It's about building a really profound foundation of trust and reliability. That's what appeals to global investors, right? It telegraphs professionalism, stability, a commitment to long-term value.
That's the strategic takeaway, exactly. It signals to the world. This company operates with the highest levels of transparency and accountability. That's something all sophisticated investors are looking for. They demand it, really.
So let's try and tie this all together, preparing for a NASDAQ listing. It's way, way more than just ticking boxes on some checklist. It's not a superficial thing at all. It sounds like a profound transformation.
It's absolutely not superficial. It represents a deep internal transformation, a significant leveling up of a company in, well, every sense. It's about achieving a level of transparency, professional management, financial trustworthiness that isn't just recognized, but accepted and respected internationally. It means adapting your whole operational philosophy, your organizational mindset to meet global best practices. And crucially, like you said, it's not a one-time hurdle you just jump over and forget. Maintaining these qualifications, stock price, shareholder count, financials, strong governance, that's an ongoing commitment. It's a continuous process of proving your worth, your stability to the market day after day. You know, it's actually fascinating to watch companies evolve through these tiers sometimes. We've seen some start in the capital market, work diligently, build up their operations, strengthen governance, and then successfully climb to the global market or even global select. It's a real testament to that latter system and the deep internal shift required.
And this whole rigorous process, it's absolutely essential. That's the why behind all these requirements, isn't it? It enables companies to effectively compete, to attract investment from all corners of the world in a major market like NASDAQ. Without that deep preparation, that commitment to ongoing excellence, that global reach, it just isn't really possible. It's kind of proof that integrity and strategic foresight, well, they pay dividends in the long run.
Which raises an important question, perhaps, for you, the listener. We've talked through NASDAQ's comprehensive requirements, highlighted the blend of specific financial criteria, those crucial liquidity demands, and perhaps most critically, the unwavering focus on robust corporate governance. It's a very clear, measurable blueprint for success on the global stage.
And yet, isn't it often the unmeasurable stuff that truly sets a company apart? Beyond all these clear-cut, tangible criteria, things like the company's narrative, its leadership philosophy, maybe even its perceived impact on society, could these qualitative elements, these less tangible factors, actually sway global investor confidence just as much, if not more? What's the story a company's truly telling, beyond its balance sheet, that makes it compelling to the world?
It's a powerful thought to consider, isn't it? The human element in what seems like a very analytical process.
Indeed, something to ponder. We encourage you to continue your own exploration into what truly makes a company compelling to the world's leading investors. We'll catch you on the next deep dive.